how do I build some income or like some level of wealth that doesn't depend on me clocking in and out? Because like I can't work hard like this forever. So stumbled upon real estate, became a passive investor into some apartment buildings.
What you don't know is costing you commas and zeros. Welcome to the Owner's Profit Playbook. I'm Pat Mancuso. Most entrepreneurs think their biggest challenge is growing revenue, but the real problem is the profit leaks hiding inside their business. On this show, we break down the strategies, structures, and financial blind spots that separate struggling operators from truly profitable businesses. Because building a business is one thing, but building a business that creates wealth, that's the real playbook.
So welcome to the Owner's Profit Playbook. My name is Pat Mancuso, and we're excited that you're here today. Most business owners do not realize what's costing them commas and zeros. On our show, we uncover the profit leaks and the blind spots holding your business back and holding you back. Today, we're talking about building wealth, but not the wealth you might be thinking of. So what if the real game is in building assets? What if you're not understanding what's costing you more than you realize? Before we jump in, a quick thought. Most business owners assume they don't qualify for R&D. The R&D tax credit is one of the most misunderstood tax credits out there. But if your team is solving problems, improving processes, customizing work for clients, there's a very strong chance you might be qualified for R&D. There's a limited window for claiming R&D credits for 2022 to 2024, but that deadline expires July 5th of 2026. After that, your opportunity is gone to recover that. And even beyond that, businesses can still qualify for 2025 and moving forward. Go to www.rdquickcheck and take a quick assessment, and you can find out if you have potentially eligibility for R&D. So let's get on to our show today. Leo, welcome to our show.
Thanks, Pat. Very excited to be here.
So, Leo, I want you to walk us through quickly your journey. Like, what brought you to where you are today?
Oof. So my story in a nutshell. So right now, I'm the founder and managing partner of Cornell Communities. We're an owner and operator of manufactured housing and RV communities in a few different states. So how I got into here specifically, funny story. So I started in college as a finance major. I really loved investments and I love thinking through things. I'm a philosopher at heart. So after college, naturally, I went into sales. Um, not really naturally, but I thought it was a great time to take that risk and to fix a character flaw that I had. Well, not like a flaw that I had, which is like I wasn't good at communicating. I was introverted. I didn't like know how to hold a conversation. Like I would freeze up in class presentations and stuff like that. So I'm like, I need to put my feet to the fire and do this. So I went and worked at Tesla. Um, did decently well there. I mean, I was their top regional salesperson, and I just ended up getting really burnt out because I mean the company was like facing bankruptcy at the time, so like everyone's like getting worked extra hard. So at that time, I kind of thought of like, okay, how do I build some income or like some level of wealth that doesn't depend on me clocking in and out? Because like I can't work hard like this forever. So stumbled upon real estate, became a passive investor into some apartment buildings, and that's how my journey got started. Fell in love with real estate, got my license, was learning and earning, helping people transact. Then was recruited to a real estate fund on their acquisitions team, helping them deploy capital, and then started this firm a few years ago now.
Well, good for you. Well, first of all, shout out to Jeremy and the team at Rise 25 for helping create an introduction here. And I've got a deep background in real estate, way more, many more years than you have, but mostly residential, commercial as well. So, real estate is one of the best wealth building assets around. So let's talk a little bit about it. I just want to kind of come back to that journey. So what did you think? What did you see, if you may, that others might miss in your journey? Like you made a transition, and sometimes people don't see those opportunities. So, what do you think was like the factor to help you to make that transition?
Oof. You know, I would say if you look at my path on paper, it didn't really quite make sense, right? Like, how does
Right.
a finance guy go into sales? How does a sales guy get into real estate? All those things. And I would say I was never given permission to do what I wanted to do, but I always had this innate kind of fire within of, okay, I need to make my life better. How do I do it? And I think I'm quite hard on myself on the inside. Like, I seem very even keeled to most people on the outside, but I think for myself, I hold myself accountable to a lot of tough things, and I force myself to take action. And that's sort of how I led into here. I'm like, okay, what will bring the most benefit to me? Like, what's the right move for Leo at this point in his life? So, pivoted a few different ways and sort of got here as well. Um, so yeah, I mean, I would say it's just having the courage and acting on it.
Well, you said something which I think is really important is that you felt like you were waiting for permission. And, I've always had this philosophy that I'm going to live my life, not the life that others, pick for me. And that holds a lot of entrepreneurs back, even in their business operations. And so it's interesting, that you kind of tagged onto that. So let me ask you a question. And we kind of kidded a little bit before our episode got started about your background. And so, why manufactured homes? Now, by the way, before you answer, I have a really good friend who made just a wealth of money in manufactured homes. So I understand it, but a lot of people may not. So, what got you into the manufactured home business?
Yeah, it's such a interesting kind of little asset class. So I was kind of randomly brought into this because I had a mutual friend. He knew I was in real estate. He's working for another real estate fund at the time that focused on manufactured housing, and he knew that he wanted to build this firm with someone. He wanted a co-founder, and he approached me, kind of walked me through the investment thesis, and two things stood out to me. One is that obviously baseline, it makes economic sense. If it don't make dollars, it don't make sense, right? This is like durable demand. I mean, people move here, they stay for 10 plus years. They love this kind of place. It's like really low cost of affordable housing that's not subsidized by the government. So it doesn't matter how well the government is doing,
Sure.
it just continues, right? So there's that portion, but also that on the social aspect, you are providing affordable housing, which I think it's easy to give it lip service, but it's another tax that you try to do it. So for us, we try to run that kind of steady path of like giving good value, giving them a good clean place to live, and like steady improvements over time. I mean, obviously, it's not perfect world. These things
Right.
take time, money, etc. But that's kind of what we try to do. We don't try to price gouge or anything like that. It's just it's tough being an operator, kind of just like being that middle section. But that's what we try to do.
So, what do most business owners misunderstand, or do you think is the most misunderstood thing about investing?
Investing, well, depends on which position that they're in. If you're a passive investor, which a lot of folks are, especially when they're business owners, they have another business. They just don't have the time to like learn everything about this whole thing and buy themselves a second job. So for them, I think that the big risk is that you want to know that you're placing your capital with someone that knows what they're doing. Sounds pretty straightforward, but like when you're new to this kind of investments, like you don't know what questions to ask, right?
Right.
A few that I always like to ask because I still invest with other firms is like, okay, what's your track record within the asset class that you're doing? What's your track record within that market? What how are investors getting paid? How are you getting paid? Because everything is structured differently. And also, who's part of the team? How are decisions being made? I think there's like firms that they've gotten so big that you can never talk to the decision makers, and you're like, I'm not interested in that because I want to know like how the guys are thinking. The guys that are actually managing my capital. So that's basically some questions.
So, if you were to think about like, and you touched on this a second or so ago, if you were to think about a business owner who's focused on their business, what's the biggest risk for them investing in another business like this, if you may?
Yeah, the biggest risk for them typically is that they lose their principal investment. So, that the worst, like, let's say the project goes completely belly up. I mean, there's like many ways to mitigate the risk. Also, good question is like, what is your risk mitigation strategy? Like, what are the risk points? How are you managing or mitigating it? So for them, they might lose their principal investment, but if the deal is structured correctly, you want the investment provider, the GPs, to actually lose even more than you. You want them to hurt. So you want them to sign recourse onto the loan. You want like them to actually have skin in the game, so to speak. A
Sure.
lot of people ask about that, but for you as a newbie investor, like, okay, some sponsors, like, they might invest a little bit, some others might sign on to the loan. So it all just depends. It's no like one size fits all answer.
So where do they start? Like, let's say I'm hearing this, somebody's listening to this podcast and they go, okay, I'm not sure I want to invest in mobile homes, but let's say I want to invest in real estate. Where do they start?
Oh, well, I think now we're so blessed that there's AI, and AI is free, right? These companies, they just have so much out there. So for me, how I started was just from social media, from like looking at Bigger Pockets, looking at YouTube videos, podcasts, Instagram videos, and stuff. But for now, you can literally have um, AI just like give you kind of, hey, top things that will move your needle forward in terms of your knowledge in this kind of opportunity.
Okay. So let's drill down a little bit further because the AI thing is kind of interesting, right? Like, we're in the tax mitigation world, tax planning world, and I saw a post the other day from somebody that we follow that when individual went online, they did a search on they were looking for a tax planning strategy, and the results came back on AI, and they basically took this strategy, and it was a $2.3 million opportunity for them. And AI cited case law, cited IRS case law, code in the IRS. I mean, it was crazy, and it was all fabricated. None of it was real. And I'm like, whoa, that's kind of interesting, right? So if you're relying on AI from your perspective, what are some common, real good places to kind of, identify, if you may?
Yeah, I think that the thing to keep in mind is that AI is like any other software. It's like kind of learning how to drive a car. You're like, okay, this is where the AC switch is. This is how I turn on the blinkers and stuff like that. I think you should learn the ins and outs of AI, like what it can and cannot do.
Okay.
There's certain guardrails that you can put in to prevent it from hallucinating or fabricating things. There's certain prompts that you can put in there to kind of guardrail against that. There's also
Right.
different platforms. Like if you want to, for example, let's see, review some cited evidence, like Perplexity, for example, they'll give you the sources that they use and obviously double check it. See,
Right.
back in the early 2000s, it was like, hey, don't listen to Wikipedia because anybody can edit that.
Yeah.
There's
Yeah.
always going to be that element of like trust but verify, and
Yeah.
like you have to verify. You cannot skip that. If you skip that, that's on you. The person that did that was just like probably putting out content in a rush.
I know it's
But
crazy.
like for us, like we use AI to help us but not to
Right.
replace us. I think that's the key. I think we're far from it being replacements to us, so we
Yeah.
we double check before we put anything out.
It's a great way to look at it. So let's say I'm thinking about, investing in real estate, whatever the form might be. What would be some things like red flags that would go, way, whoa, 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 I should avoid that? Like, what's the biggest things you would suggest people avoid?
Hmm. Well, this might be a little bit technical, so I will give you
That's
two
okay. Yeah.
responses. All right. So the first and foremost is trust your gut. I think I've learned through the years that your gut has thousands of data points that it gathers through time of, okay, if this then that, like, oh, if this person gives me that impression, then that happens, and it just internalizes it. So like sometimes if people don't give you the right gut feeling, like just trust it. And I think that's part of aging and wisdom, right? The second and more tactical answer is like you want to see what their business plan is. So one part is like, okay, how good are the operators itself? How good is the team actually managing the asset? But then another part is like, what is the asset itself? What is the business plan? Okay, like let's say you're looking in this particular market. What are the figures to it? Is the population growing, declining? What's the rent growth or income? Like how affordable is this kind of housing product, for example? And then also, if you're even more technical, you can dig into their underwriting. So, every opportunity gets analyzed and like it passes certain metrics. So you're like, well, to get this return, let's say it's like 15% return, like what must be true? So the assumptions are like, hey, rent has to go up 15%. You're like, all right, how reasonable is that? Or like, okay, we're assuming this exit valuation, like, okay, what's the weight of probability you assign to that? So kind of like just making mental notes. I think you can get like really deep into analysis and underwriting, but I think just from a fundamental perspective, like how do you feel about the assumptions that they're making? What what levers are driving the value add in that project?
Right. So let me ask you this. On the owner's profit playbook, our goal is to close profit leaks, but also to add value. So when you hear like the question of where do you see the biggest profit leaks in investing specifically, like what things if I were an investor listening to this, and maybe I'm new, maybe I'm passive, but maybe I'm super experienced, but I'm still passive. What would be some of the things you would suggest that they look at or look for?
Hmm. So two sort of ways to look at it. One from the perspective of the project itself. There's a ton of places that profit can leak. One is like how is the property management being done? Is it being outsourced? Is it in-house? How good is the solutions? Another is vendors. Vendors like when you take over a property, they're like, congratulations, here's the new customer price. It's very important to rebid it and like make sure that they're being fair with their pricing. So making sure that the management team is doing their proper kind of checking the boxes that way. But for investors, I think for them the profit leaks is where the kind of promote and fee structure comes in. Is like how do they get paid? When do they get paid? How much do they get paid for both the general partner and the limited partner? And for every single project, it's different. I hate to say there's like a one size fits all thing because I've seen a lot of like investors, like, skilled passive investors, like they've done a few of these. Like they think they're comparing apples to apples, but like you can't compare a $20 million project to a $2 million project because,
Sure.
fees get paid in dollars or like bills get paid in dollars, not percentages. And like they seem to take one for the other. So it takes some degree of nuances and like asking questions, being curious, and like the right sponsor group will be happy to answer these questions because, I mean, for example, for me, like I've been on the other side of the table and like I always ask them like a ton of questions. So like I never feel bad about answering them.
Yeah. So right now, where do you think the best opportunity is in terms of asset class for building wealth first and then for income?
Hmm. So building wealth, it really depends. I mean, obviously it's not financial advice, but like you want to just think fundamentally. Like where do you think the world is going to go?
Mhm.
For us in mobile home parks, we're like, well, this is the lowest cost form of housing. They're not building anymore. Like people are always going to want cheap housing, right? Like
Mhm.
who's not going to want it? Like the demand will always be there. So that was our thesis, whereas like another person like storage space might be like, well, people are downsizing, their homes are getting smaller and smaller, so like they're going to need extra space and like they would much rather get a $200 storage unit rather than paying $500 for an extra bedroom.
Right.
So, kind of having like a core kind of thesis, which is why it's important to listen to podcasts like this. So, like, you understand like how the operators are thinking through these things, and you can sort of test the logic against your understanding. You're like, I agree with this guy, or like, no, 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 I don't agree with that. So, like, come up with your sort of way of thinking. So
Okay.
that's like building wealth. Cash flow, it just depends on what kind of asset. You can kind of look at different things. So like multifamily tends to have lower cash flow than, let's say, mobile home parks, because it's like lower expenses in mobile home parks. So like you have varying things. RV parks are much higher cash flow, but needs a lot more work. So like, is the team properly equipped to handle that project, etc.
Sure. So you guys are both investors, right? So how do you put, let's just say, like, what are you doing right now? And you don't have to give trade secrets away, obviously, but what are you doing right now when you're looking at investments? Like, what's the process? And not the specifics once you have it, but like if I want to get in, like what are you guys looking at right now in terms of investing?
So, I'll speak for myself. So when I'm a limited partner on other people's deals, it's more so just like my personal capital that, I want to diversify and, not have all my eggs into one basket of mobile home and RV parks. So, my kind of viewpoint with that, as I mentioned earlier, is kind of just intuitive first. So like I go with my gut. Do I like these guys? Like, do I sense like there's potential, and then I dig into their underwriting, their assumptions, etc. But as investors for our investors, so like how we find properties, we're fortunate in the sense that we built out our own sort of deal sourcing team, so we're not entirely dependent on brokers, wholesalers, and stuff bringing us deals. So we find them on our own. We kind of take matters into our own hands. It sounds romantic and nice to say,
Mhm.
but like we've worked harder than ever to get fewer deals than ever now, because it's just like such a competitive market to find good deals. And
Right.
for us being operators, we know like, okay, like if we look at a broker's market, I'm like, we can't assume that. Like that's way too optimistic. So, we price accordingly. And yeah, I think viewing it from the lens of like, how will this asset operate? What can you realistically expect? And like, what do you need a budget for? Those are crucial things for us.
Okay. And what's the biggest blind spot you think that you might even have, but that in general people have going into investing? Like, what do you think is the
Mhm.
biggest blind spot they have?
Hmm. I'd say a few that come to mind is the regulatory environment, especially for our space. A lot of it is out of our control. I think there's like well-meaning politicians, they want to help people, but like they don't
Wait a
fully understand
minute,
what they're
wait a
doing.
minute. Find me a well-meaning politician.
That I mean, I don't know. Like I think a lot of like regulations gets passed and
Yeah,
like it's kind of out of our control, right?
yeah,
And that's one thing. But other blind spots are more so just if you don't properly suss out like the condition of the property, you're not like budgeting in like let's say if you need to replace a septic tank, like okay, like you should know how many and when. So those are always like things that like you can think forever about. That's why it's important, like analysis paralysis. Like, yeah, think through it and then make a decision and then make it a good decision rather than like think, is this the right decision?
yeah. Well, and going back to the well-meaning politician comment, unfortunately, I think sometimes the political environment or the environment in certain areas, they actually forget about that you have to make a profit in whatever you're doing in order to keep it going, right? Like you can't have a mobile park that's not making money. Eventually, it has to close and or go bankrupt or whatever a business does. And so that
Yeah.
that's my well-meaning. I think
Yeah.
we need to get part of the requirement of politicians is they probably need to own and run a business and pay payroll and do the things that you actually have to do to make a profit in a business before we give them the keys to one of the biggest businesses in the world that's
Yeah.
government, no matter what there's. So
Exactly. I
um
will say, capital goes where it's welcome and it
yeah,
stays where it's appreciated.
yeah,
So it goes where on paper it looks nice, there's job growth, whatever, but like it stays where it's appreciated because there's so many little things in your interactions with like municipalities getting permits approved. Like if it's easy, if it's hard, that kind of determines like whether or not you want to buy more properties there. And like, for us as an operator, like obviously like we're in the business to make people money and like they're who make this project possible. And like our investors get paid first before we do. and we're not a charity, so like our projects have to be a certain level of profitable, and like if the regulations make it so that we can't do it, then we just can't do it. And like
Yeah.
we can't operate there, we can't have our flavor, we can't impact the communities. So it's just it changes which projects that we can take on.
What's the biggest mistake you've made as a business owner, entrepreneur?
Thinking I could do it all.
Yeah.
I think it's like in part ego, in part fear. It's like more so okay, like I can do it all. Just because you can do it all doesn't mean you should. And I
Right.
think it's like very important to build out an infrastructure before you're ready. Like train staff, document things, and it's going to cost more and it's going to be done worse, but you have to do it because that's how you grow the business.
Sure. And so let me drill down a little bit. The biggest financial mistake you've made, like in terms of what was the actual cost to the mistake and what was it?
Um, maybe it's not real estate related, but
That's okay though. That's good.
okay, okay. I was trading penny stocks back during COVID.
I love it.
I thought I was smart, and hey, man, everybody's a genius in a bull market, right?
Right.
When you watch your portfolio go straight up, like I
Right.
remember, I set an alarm at 3:57 a.m. to buy GameStop stock because and it was like I caught it at the right day too. Like it went up like 10x. I was like, oh my god, what just happened? I couldn't believe it. And like greedy me, didn't sell because I'm like, hey, it's gonna go to the moon.
Good
Came right
Lord.
back down. It's
Warren
painful.
Buffett. You thought you were Warren Buffett that day. I love
Oh
it.
man.
I
Yep.
love
Yep.
it.
What a ride.
What is the biggest mistake in investing that you've seen? Not you personally, you didn't experience it, but what's the biggest mistake you've come across that somebody's told you about in investing in real estate? Any specific examples?
Yeah. I think it's commonly it's either the incentive structure of like when do the sponsors that the general partners get paid, when do the limited partners get paid? Because sometimes, if the project's like large enough, it's like non-recourse, like these guys don't care. Like if
Yeah.
the project, I mean, I'm sure they mean well, but I'm saying like, it can happen that like, if it goes belly up, like they're fine, but their investors are not. So yeah, that's always like something that I hear about just talking to investors. They say another one is like, yeah, I mean, you have to like, especially in the private credit realm. Like I've had like a couple deals myself that just like didn't go as expected from the limited partner side. But yeah, I mean, it's just like you don't know what you don't know because like if you're taking the lender's word for it, then you're kind of depending on the lender to do the proper due diligence on the sponsor, and then like that's like more moving pieces that can go wrong. And like sometimes it does, and sometimes it doesn't. So yeah.
So I know that the next question I'm going to ask you is going to be different perspectives, if you may. But I'm just curious, from your perspective, what's more important to you as an investor? And then I'm going to follow this up with a similar question. But as an investor, what's more important to you, cash flow or appreciation?
I do like I hate to say I do like a bit of both. Um,
Mhm.
Cash flow only it's like you're a private lender, you're getting certain levels of income, but if you get enough cash flow from an equity kind of deal, that's great because cash flow kind of takes the risk off your table. Because
For
like
sure.
once the cash is in your bank, they're not getting it back, right?
Right.
And then if you have that back end appreciation as well, and then you're a part owner, you get the tax benefits. That's great. So I would say a bit of both. And I know it sounds self-serving to say, but I do like mobile home parks for that reason, and
Yeah.
that's also why I kind of dedicate so much time into this asset class.
Well, when you look at real estate, right? Like, I'm in an area where they are attempting to and have done successfully in some cases, although now they're seeing the ramifications of it, of rent control. And I don't think they're probably doing a lot of rent control in, mobile home parks. But at some point maybe that comes there. So yeah, that regulatory environment can really have an impact on what's happening there.
Yeah, there's actually that's one of the big kind of threats to mobile home parks. Like one is the actual condition itself, because these properties are older, they're not
Right.
improving more of these, and like yeah, if you don't have enough money to make the necessary repairs, it might fall into like health and safety hazard, get condemned, and then like a bunch of people get displaced. Or, the other side is like rent control is like, hey, look, if there is no budget, how are you going to get the budget to fix it? You have to bring up the rents closer to market, which, a lot of the individuals, like they just don't raise the rents enough. Um,
Sure.
and yeah, that's what happens. So those are the two big things.
So I should have asked you this earlier, but it just dawned on me. So in the investment class you're looking at, obviously there's the land that the home sits on, right? And then there's the home itself. So are you investing in both?
Typically, we like the land
Right,
much more than the homes itself. So
right.
we like for the residents to own their own homes. However, if you buy like 50 unit, 100 unit community, like there's going to be some that are owned by
Sure.
the property itself. Um, yeah.
Growing segment, I'm assuming, just because of the cost of housing.
Yeah. Yeah. I
Yeah,
mean, the cost of the housing has gone up a lot
yeah,
in recent years since COVID because of like a lot of their components, they're shipped here or something, and labor costs are going up. But our residents like to have their own homes because if we clean up the community, make it a better place to live, then there's value in their spot here. So
sure.
they could sell it for a little bit more.
How many units, just curious, do you have under management right now? About,
Right now around 600.
wow, okay, that's a handful.
Yeah. Yeah.
So, if somebody was like, so we're going to kind of tie some things up here. So, if somebody was looking to invest in, let's say, with you, and obviously they might invest with others, but generally speaking, what type of dollars are we talking about in a minimum to get into something? And I know that's going to vary, of course, per the project, but how would you respond to that if somebody's thinking about, hey, I maybe need to look at investing in another diversified area?
Yeah, yeah, yeah. So we try to keep it as low as we can for as long as we can because part of the reason why we started the firm is to offer these kind of opportunities to
Right.
regular individuals. So for us, we're typically around 50,000. But I would say most people put that, if not like more, just depending on their situation.
Okay. Okay. So let's kind of tie this up, kind of put a ribbon on this conversation. So, if somebody was listening, how would they reach out to you? Like, how would they get in touch with you, and what would be the steps to do that?
Yeah, so there's a couple ways. One, if you want to learn more about our team, our asset class, you can go to our website, cornellcommunities.com. That's CORNELLCOMMUNITIES.com. Or you can reach out to me on LinkedIn or Instagram. LinkedIn, it's Leo Young, LEOYOUNG. Instagram, it's Leo Young Real Estate.
Leo, thank you so much. It's interesting when from my perspective in our world is when we think about, owner's profit playbook, um, an investment like this wouldn't come right to the top, right? And that doesn't mean there's anything wrong with it. It just means that we don't have enough exposure to different things and different opportunities. And so what I feel like you brought today is both your journey, which I think is amazing, right? Like you never thought you'd start banding up here based upon what you shared earlier. And now you're running a successful business, great returns, creating opportunities for others and looking for opportunities to help others. And so I think it's just amazing. So I truly appreciate you being here today and everything you've contributed.
Definitely appreciate you having me on, and to the listeners at home, just challenge yourself to take one takeaway from this. If it changes the way that you think, just do something because it's easy to listen, but it's hard to take action.
Yeah. Oh, there's no doubt. There's no doubt. Well, thanks, Leo, and I appreciate everything that you brought to the table today. And so, for our listeners, thank you so much for listening to the Owner's Profit Playbook. Please subscribe, share, and as Leo said in his final thoughts there, take action on something you hear today. And we appreciate you listening, and we'll talk to you the next time on the Owner's Profit Playbook. Take care, everybody.
If you're serious about building a more profitable business, make sure you subscribe to the Owner's Profit Playbook so you never miss an episode. And if you know another business owner who could benefit from this conversation, share it with them. To learn more about how we help business owners uncover hidden opportunities and strengthen their financial strategy, visit mancusocg.com. And remember, what you don't know is costing you commas and zeros.